out, we have one more expert, our market master for the morning, joining us, Tushar Pradhan, the CIO of HSBC Global Asset Management. Morning, Tushar. Good morning, and thank you very much for joining us in this show. Well, what's the sense you're getting? Are we heading into a year where we will see gains for the Nifty? 2015, from a Nifty point of view, has been quite a disappointment.
Yeah, I think 2015 was a disappointment, largely dealt with the fact that we had very weak macro. We had earnings which had to be readjusted downward in successive quarters. We did not see the reform situation carry out its own situation as what was expected. So there were a lot of delays in terms of what was expected and what was delivered. So I think as a result of all of that, and of course the uncertainty in the external markets led to a very, very soft 2015. But I don't think that there is any reason to now write off 2016 altogether because of what has happened in 2015. I think what it is done is that it has done a base. It is kind of bottomed out. Most of the situations that we were worried about have actually been playing out, whether it's in the external situation or on the domestic front. We are seeing most of the banks now ascertain the extent of their asset book quality, so on and so forth. So I think there is enough reason to be, optimistic about what's the next year going to bring us.
Okay, Tushar, hi, good morning. I was going through your report, and you do spot a couple of opportunities in, in specific sectors. And one of the sectors you're bullish on is NBFCs. But we've seen some really good performers this year from the likes of Bajaj Finance, etc. Where do you see more value in 2016 in the NBFC space?
I think there is enough value across the space in NBFCs simply for the fact that you have to look at the situation where the banks are. They have focused on the large loans, they have pretty significant provisioning requirements, and the availability of capital for them to grow their book if demand comes back next year is fairly limited in that sense. The NBFCs have actually put themselves into a very nice position, bringing market share. They are looking at niche areas. They're not a bank which provides everything for everybody. They're not in the deposits gathering situation at all. They don't compete really there, except of course for the overall cost of funds. But I think there are pretty interesting areas in that space, which I think going forward, while valuation of course in certain areas are not really that attractive, but the fundamental domestic growth that we expect that 2016 will be the start of, I think these companies are very, very fairly positioned to take advantage of that.
Okay. The other space that you're bullish on is the auto space, commercial as well as passenger vehicles. But this year, there's been a big dichotomy. On one hand, Maruti has gained 30%, and on the other hand, Tata Motors has lost 20% this year. So it has been a confusing picture. How do you approach 2016 in this sector?
Yeah, I think there is a slight difference between what is the listed alternatives available for us in the market as well as what's happening on the ground. Some of them are non-listed actually as well. So the whole idea is to give a sense of what sector was doing well regardless of the listed opportunities. Clearly 2 or 3 things are working in the favor of this sector. One is that the 7th Pay Commission has increased urban incomes to a very significant degree. And as we all know, once the central government actually does the change, then it follows through in the state government and the public sector units, so on and so forth. So we see urban consumption really start to pick up. If at the same time, and we've already seen a pretty significant drop in interest rates, and if that gets transmitted into real purchasing power for consumer discretionary items such as cars, for example, I think we're going to see a very natural bump in terms of demand there. And that really is the point I was making in the report. Now, in terms of the dichotomy you talked about, obviously there are stock-specific issues, especially when it comes to Tata Motors, that the softness at the beginning of the year in terms of the global demand for luxury goods was something which was an overhang for the stock. And the very, very difficult environment locally also was something which was dampening the sentiment. But I think going forward, both from a CV cycle perspective, from a revival of sorts in terms of numbers that we've seen in the last few quarters for even luxury goods sold in China, I think that's again a reason to believe that the sector overall is estimated to do pretty well for this year.
Okay. Will this also be yet again a mid-cap year, 2016, Tushar, or will the big boys come out and perform?
Well, that's a very interesting question. This is something which I have actually been toying with for a little while, because if you look at the classic ways that the economy turns and then how the stock markets revive, it usually is led by the large caps. And the mid caps really come in the second phase, because once the overall economy starts to do well, then the mid caps really start to benefit from the overall spending in the economy. But this year, it's not been really classic in that way, that we see the mid caps actually having done even before the economy has bottomed out. So it's a little bit of a change from the norm. Going forward, I think there is a reason and a case to be made for large caps, simply for the fact that since April of this year, the FIIs have more or less remained, out of the picture. They have consistently taking money off the table. Emerging markets have not been really very hot, and as a result, I think India flows also follow those. But I believe that when fresh looks are taken at asset allocation globally, we should look at a situation where India clearly looks to be in a better position across most emerging markets. And I'm very hopeful that allocations, especially, I'm not talking about India specific, but at least from a emerging markets perspective, I think there might be reason to be expecting flows to come into India from global investors. And typically these investors prefer large caps. And over this period of time, the underperformance in large caps also will be mean reverting to a certain extent. I would think that there is enough to kind of say that the large caps can bounce back. But having said that, again, I will just remind you again of the fact that once the economy starts to pick up, the mid caps also perform. So there is something for everybody there in the next couple of years, I would say.
So 9,000, 30,000?
Very difficult to predict, because as you know, if it does hit it that one day, then the prediction is correct, but the next day something else happens.
No, what are the general gains for the year? Do you think they give you a 15-20% return, the big boys?
I think the only problem, to kind of make a very simplistic view of where the markets will go by the end of the year, is the fact that the valuations today reflect some sort of expensiveness, not because they are euphoric, because the under-delivery in the earnings has caused the PE ratio to become a little expensive. But that's actually a little bit of a red herring, because if you see that if earnings start to pick up, then we are quite almost on the average that we have seen for the last 15 years on a one-year forward basis. So I think in terms of the returns from here, they are just kind of tempered by the fact that if the market starts to build in those kinds of returns, then the market will become even more expensive on a PE basis, which I think is unlikely right now because there's no euphoria. So I would think that the market return will be a little back-ended and towards the end of the year. So that really means that maybe the upside is captured before December next year, or it might just spill into 2017. So that's why I'm a little hesitant in saying, well, what's the return for next year?
All right, Tushar, we'll leave it at that. Thanks for joining us. Well, 2015 was not a great year for equities, but HSBC Global believes that 2016 will be a better one. Well, we leave the markets in a good place. It's up about 0.5%. It's been a fairly stable morning.